Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Ann Sonders joins us, patiently awaiting here as we look at this news out of the United Kingdom. Ann Sonders, my radar's up when someone says buy the dip. How dip are the software stocks this morning?
Well, as you know, Tom and Paul, I'm not an analyst. I don't cover the software stocks. I think it's a little bit more existential what they're dealing with versus some of the other stocks or groups of stocks that have been hit. As you have this sort of AI-related money swirling around, everybody is looking for both the shiny new object, the dull new object, who is a beneficiary, who is getting disrupted. And I think that type of backdrop will continue. We haven't really seen the retail trader come back in a significant way. I think they've been supportive of less downside in some of these areas, but they're not proving to be the big buy the dip crowd like was the case in the past couple of years.
Paul, the pricing here is like October of last year. Yeah. I mean, I don't even think it's a correction.
No, not yet.
Correct me if I'm wrong.
Exactly. Liz, we have seen in this marketplace really since kind of late October, early November, a rotation, maybe out of some of the growth names, some of the tech names into some of the more value, maybe small and mid cap here. Give us your thoughts on that.
So I think the broadening out trade definitely has legs. The initial juice provided to the small cap space was in advance of what ended up being a short-lived easing campaign on the part of the Fed. But then I think more of the fundamental side kicked in. It wasn't just about rate cuts, because the trajectory for earnings broadly in the Russell 2000 looks quite a bit sharper than it does for the S&P 500. That said, what's been interesting is last year in the small cap rally, it was heavily driven down the quality spectrum, non-profitable stocks within the Russell 2000 having twice the performance of profitable stocks for full year calendar 2025. That's been turned on its head. And now it's the profitable components within the Russell 2000 that are handily outperforming the non-profitable. And that was something we were saying, you want to fade the unprofitable and lean into the profitable. And that certainly kicked into gear this year.
Lizanne, we're probably, about 80% away through earnings for the S&P 500. What have you seen? What have you heard about guidance that gives you your sense as to where this market could go this year?
Yeah, so in the aggregate, the earnings growth rate is quite a bit higher than what was expected at the start of the year. We're up at around 13% and change, and that's the blended growth rate, which includes everybody that has reported and the few companies that have yet to report. And that was mid-single digits at the start of earnings season. I guess the difference, though, relative to the past 4 quarters or so is that the beat rate, both on top line and bottom line, has been weaker relative to the 4-quarter average, relative to the longer term since mid-1990s average. So that's what's been distinct about this backdrop is overall higher earnings growth, but a lower beat rate and a bit more subdued forward-looking forecasts.
So, Lizanne, we're thinking about this market here. Valuation, it seems to have faded a little bit in terms of concerns for market participants. I'm not sure I'm hearing as much concern about valuation for this market these days. How do you think about that?
Well, maybe that's because in the aftermath of the so-called Liberation Day tariff announcements, and then obviously the subsequent 90-day delay, obviously that move on April 9th began what was an unbelievable surge. But what was interesting is you then stopped the valuation expansion in around August of last year. And valuations have been relatively flat, yet at the same time, you've had that rising earnings growth trajectory. So it was almost like the market paused and said, okay, we need earnings now to start to do more of the heavy lifting. We're sort of past that automatic valuation expansion. And earnings indeed have begun to do more of the heavy lifting. So you've eased some of that valuation concern by virtue of the choppiness we've seen in the equity market, yet at the same time, earnings continue to power higher.
Lizanne, I've known Nora Rubini, I think, as long as I've known you, and he dropped a bombshell yesterday where Dr. Rubini made clear he looks at the productivity and technology of America and models a closer to 4% economy than a 2% economy. Could we miss here an exceptional moment for American growth? Is that modeled in?
I not only do I think that it's not modeled in, but I think it's really a key ingredient in light of the very weak labor force growth that we're seeing, courtesy of the crackdown on immigration. You know, we know the formula that goes into what GDP when GDP is released. It's everything from, government and private sector and consumption and the relationship between imports and exports and business investment and residential investment. But at its base level, the calculation for economic growth is productivity times labor force growth. We don't have the labor force growth piece, but we certainly have had the productivity piece. And that has been a beneficial offset in an environment where we have very constrained labor force growth. It also tells you that if that productivity miracle, if we want to call it that, fades at all, absent any pickup in labor force growth, then we probably have a bigger problem from a GDP perspective. But that's certainly not been the case.
Liz Ann Sonders with a far too short and of an interview. Thank you so much for the conversation this morning, Liz Ann, wrapped around the moment that we're having in London. Liz Ann Sonders, always and forever with Charles Schwab. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
At Brown University, and just definitive on our American history here. Wendy, a remarkable set of sentences with Helene Cooper in the New York Times this morning. It really struck me. For a president who ran for office promising to keep the United States out of wars, Mr. Trump is now considering what would be at least the 7th American military attack in another country in the past year, and his second on Iran, et cetera, et cetera. Professor Schiller, how did we get here?
Well, I think Iran and the United States has been a complicated problem, as you know, for, 50 years now, just about 50 years, a little under. And I think it's impossible to be the world's superpower and stay out of international conflict. It's just impossible. You inherit this edifice if you are President Trump. He had it in his first term as well, and Biden and Obama and George W. Bush. And, it's very hard to unpack that or dismantle that edifice. And that edifice is, frankly, the beacon of freedom. People can challenge that if they want. But, we are a country that since World War II enforces the international order. And even though Trump is pulling out of international organizations, we are still that country. And it's just simply impossible to avoid because the United States is so embedded in the global order that if Iran poses any kind of threat to our allies or to us, then we have to act. And that's the job. So I think the promises he made were, I'm not going to do this willy-nilly. I'm not going to go in search of monsters to destroy, as John Quincy Adams, as I've talked about that, has said 150 years ago, but more than 150 years ago. But he has an edifice that is still the world's supreme power and defender. And it's just impossible to walk away from that if you're the president of the United States.
Given President Trump's he's focusing on international affairs, and I guess that's typical of a second-term president here. How concerned is the administration, is the Republican Party with his low approval ratings here?
Well, that's sort of the big criticism that people like Marjorie Taylor Greene, former representative in the House who just left, made about MAGA and about what Trump created. And sort of I was going to go into office if I'm Donald Trump. I'm going to get rid of the rhinos. I'm going to get rid of this sort of Republican impetus to go to war, even though Democrats start as many wars as Republicans in the last 100 years. But nonetheless, I'm going to get rid of all that. I'm going to focus on the United States. And what she's saying is that he's betrayed that promise. and that he's deflecting. But I think that's just more complicated than that because of our global interests, because we are globalized, because our economy rests on the stability of the rest of the world. We can't just sit things out. And I think that's the thing that possibly the base that voted for Donald Trump, didn't want to hear or doesn't want to accept. But certainly as president, that's what he has to do because he makes an argument that it's in his interest. Is this deflection? It'd be a very expensive, risky deflection from the economy, from affordability, from ICE tactics. You can do other things if you're Donald Trump to deflect. You don't have to start a war with Iran.
President Trump has done, I think, a pretty good job of kind of fraying the allied relationships that the United States has enjoyed or fostered since World War II. Is that going to come back and bite him here to the extent he does take some drastic moves here in Iran? Does he have the support of allies?
Well, Paul and Tom, this is a really important question. We saw the first Gulf War and we saw the second Gulf War. And we realized that the United States went in an international community the first time, but really with Britain, on its own, the second time, and it left us a 20-year commitment to war. So it becomes more expensive and more risky to do it by yourself. But Trump had legitimate points about NATO. We can all agree they weren't paying their fair share of NATO, and the United States was carrying the burden, and that was true. And I think you have to give the president credit for saying, look, you have to stand up for yourself. We're not going to be always able to shoulder the burdens as we speak.
Paul, should we talk economics?
Yeah, maybe we can
do that. Let's digress from geopolitics for a moment. We do it with Wendy Schiller and greet all of you across the nation. Wendy, I'm reading the Morgan One volume on William McKinley. I'm ignorant on the period of the Gilded Age, and I'm, getting out. I'm trying to get forward to Grover Cleveland Alexander. And Professor Schiller, what I see with McKinley is he walked back his massive protectionist tendencies. Are we seeing that with this president now, that he's doing a so-called Buffalo pivot in his own Trumpian way?
Well, here's where I think this is a great example. This is where elections matter, and that the founders put midterm elections in. And, that was supposedly a check on the House, really, mostly because everybody in the House is up for re-election every 2 years. But it's really a check also on partisanship and on the shared party between the president and Congress. This is a check on the president. He realizes that the last 2 years of his presidency will be quite unpleasant if the Democrats take both the House and the Senate. And what he's hearing from his party is the Senate's in play. And that's because of his economic policies and, to some extent, tariffs. And he hasn't brought manufacturing back. And these are overwhelming everything else he's doing. So I think that's where the urgency is coming in terms of tariffs. And of course, Grover Cleveland and Donald Trump share a very important commonality, right? They won, they lost, and they won again. McKinley, the McKinley bill, of 1889, as you well know, was the largest tariff protectionist bill pretty much in our history. And of course, by the time he becomes president, McKinley realizes that's not the way to run the rodeo. So I think this is what's happening at the same time. Things aren't kicking up in the economy, and he's hearing that he could lose the Senate, which will make life very difficult for Donald Trump.
Quickly here, it's off your remit, but I know you're sneaking into class with the late, great William Poole or other great economists at Brown University. Kevin Hassett with an uproar yesterday, folks, criticizing sharply the New York Fed academics over who pays the bill. Professor Schiller, enlighten us. Do we pay the tariff bill, or does some company over in Vietnam pay it?
This is the thing about diffuse costs versus concentrated costs. This is the whole crux of the intersection between the economy and U.S. politics. When the costs are diffuse, it is harder to sort of get voters to pay attention. When they're concentrated, like I need a particular part to make another thing in the United States, and that part now costs 25% more, that hurts concentrated industries. And we are an economy that is so broad and diverse and service-oriented now that voters and most people don't feel it as acutely as concentrated industries. But the problem for the Republicans is that some of those concentrated industries are in states that have key elections this year. So that's where this intersection happens. But it's always the battle between diffuse costs and concentrated costs, particularly when it comes to trade politics.
So, Wendy, how aggressive can the Democrats be here in these midterm elections?
Well, Paul, the Democrats can find a way to lose an election they're supposed to win. We've seen that before in the past. They have to get their act together and agree on their messaging. And now they've got a couple of things. One is overreach, but they have to move away from, democracy's failing. They're winning special elections all over the place. So in some ways, democracy is not failing them right now. They have to go zero in on core issues: healthcare, affordability, and individual security from the intrusion of the federal government. 3 issues. Bill Clinton always said you need 3. So George Bush had 3, George W. So they have to get their act together and decide this can't be a diverse, dispersed campaign for the Democrats. They have to zero in on a couple of issues.
Professor Schiller, thank you so much for the brief this morning. Much needed on our geopolitics. The economist, Wendy Schiller of Brown University. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
This is a joy with substantial physics out of the Massachusetts Institute of Technology.
Heard of it.
And then he got into the totally cool and still cool physics program at Boston University, a really unknown magisterial program. Then he wandered out to JPL to put men on Mars or whatever. We could do the whole thing on space here, George, but with PGIM, let's do it with George Patterson here on where we are right now. The leverage of 1998. Some people knew it was there. I've had the honor of talking to Myron Scholes 2-3 times. Do we have visible leverage now within the system, or do we have a discrete hidden leverage within the system that we don't understand?
We spent a lot of time. First of all, thank you for being here. A great opportunity. We spent a lot of time worrying where the hidden risks are in the economy. There's really no obvious excesses, right? There's no obvious areas where we worry that capital is misallocated, particularly relative to the people that can afford to take the risk. So we don't see those types of hidden leverage scenarios.
You guys are belt and suspenders. I'm fronting Paul Sweeney here. This is his question, but I'm stealing it. Private credit? You got to be kidding me. They want to put it in my IRA?
Listen, private credit, like all private assets, has a place in portfolios. It's what's important for everyone really is to design a portfolio that meets your needs. There are substantial return opportunities, but you need to understand what you're getting involved in. You need to understand the limitations, the upside, and also the downside.
Did that sound like the general counsel of PGIM? He memorized it. That was brilliant.
Exactly. George, you think about 2025 performance, U.S. equities did really well, but rest of the world did a lot better. How are you thinking about U.S. versus rest of the world here?
Exactly. In all honesty, many of the best opportunities, I would say, are probably outside the U.S. The U.S. has, again, strong performance. But when you look at both emerging markets and even just European equities, Japanese equities, 25 was a great year to be outside. And one of the great things about diversification is that it's one of the few free lunches that you can really have in the world of investments. You can diversify your portfolio, you can take lower risk, and it really doesn't cost you anything to do that.
So, a lot of the performance in 2025 outside of the U.S. was the weakening U.S. dollar. I'm not sure we can count on that again. So to the extent that you're, overweight rest of world or non-U.S., what do you have to believe there?
Well, part of it's just where do you think the growth is going to be? For an with regard to emerging markets, I think tariffs have largely come in a little bit lighter than expected. If you look at manufacturing in the U.S., it's not coming back. I'm not quite sure there's really an appetite for manufacturing jobs. So a lot of that is still going to happen in emerging markets. A lot of wealth creation is still going to happen there. I think the fact that there are less headwinds with regards to tariffs and different policies really just sets it up. We've had great performance in emerging market. I think we could be at the beginning of a cycle where we see continued performance there.
George Patterson with us. We're going to get to the claims report here in a moment. Let me squeeze one more in. I want to come back and talk about some physics envy as we can. You're definitive on this. Are the classic curves, the Gaussian curve, the log normal curve, Taleb's Poisson distribution, are they acting normal now? The dynamics, the nudginess.
Listen, those are nice analytical forms that you learn in school, but the real world is not like that.
How distant is our real world from those analytical forms?
Listen, things tend to be quiet for a while, and then you get much larger tails. So I think literally whenever we fit distributions, whenever I give internal seminars, I'm always telling the young researchers, don't assume normality, you estimate something that has wider tails.
So when you bring your Hinckley picnic boat down the Hudson to PGIM, is the name of your boat Suddenly?
Not quite. I'm not quite at the Hinckley level.
Yeah, well, we'll see. Well, you're all, I'll use Purcell's. I mean, he's got it as well. We've got a ton. It's a Seattle slew of data, Paul Sweeney.
Yeah, we got the initial jobless claims, Tom.
Look at that. It's a Lachman-Achathon number.
It is. It's 206,000. The consensus was 225,000, Tom. And the last period was revised a little bit higher to 229,000 higher. So a much lower rate here this period here.
Interesting to see here on the 10-year yield. You got a higher yield. I guess they're looking at that as a more buoyant economy, 4.10%. Futures are negative 26 right now, and the VIX extends out from a 20 level out to 21.50. Okay, I want to talk a bit quant here. We're going to go a little bit physics, folks. There are things called cross moments, which are a 4-box description of the dynamics of the market. Fancy people like you, George Patterson, talk about the slew rates, the rate, on a Newtonian basis, the rates of change. Are you worried about suddenly second derivative, suddenly first derivative, suddenly slew rates we can't handle?
Listen, we do worry. When we do portfolio construction, we go way beyond mean variance, right? We look at higher moments. A lot of times it's more co-kurtosis and co-skewness.
Oh, boy.
I know. It's probably a little bit early in the morning for some of those words.
No, they cured mine at New York Presbyterian. Continue.
But you do, like, the challenge is that markets are oftentimes, very quiet, and then you get these large moves. And in order to think about how to position for some of these large moves, you need to be able to deal with how things work in extremes. And that's really some of the approaches that we use, is looking at things beyond just, kind of textbook portfolio construction that you might learn in an MBA program. It's really, how do you think about robust portfolio design? How do you think about downside protection? Because a lot of times you might not want to own some assets that really give you the type of tail protection that you're going to get.
So put all that together, sitting here early in 2026, what's my allocation here? Stocks, bonds, U.S., non-U.S. Has it changed for you guys?
So it has changed, and part of it is really the long-term outlook. So, one of the great things about bonds now, with yields where they are, is you're getting paid.
Yeah.
So, if you look at equities, U.S. equities are slightly expensive. The U.S. has been a phenomenal growth market, but if you look out in like 5 to 10 years, U.S. equities are relatively expensive. So you get paid, you can get a lot of diversification by having some bond return, particularly when you're looking at, kind of an institutional credit bond portfolio in the 5%. Also, looking outside the U.S., that's where we see opportunities. All of our macro indicators indicate smooth sailing ahead.
Oh, I like that. You just nailed right into where I was going. Smooth sailing. The wonderful Kent Osborne had a book years ago, Iceberg Risk. He's done all sorts of work, folks, Credit Suisse and Goldman Sachs, IMF. He's like a horse in the quant area. It's Jack, and he's out in the bow of the Titanic, and they're two statisticians. And they decide, they just got it all figured out. The ability to get hit by an iceberg on the Titanic isn't there. And Kent Osborne says, that's iceberg risk. How are those icebergs looking right now, George Patterson?
Listen, you always have to be, pay attention and be nimble, because you never know when something can emerge. Again, we've had a lot of economic data. Some of it's a little weaker, some of it's a little stronger, but it's been surprisingly boring, in all honesty, in terms of inflation. Seems to be relatively contained. I know we've had some conversations yesterday about Fed speakers that are concerned about it, but again, the market seems to be fine with it. Unemployment seems to be good. Growth seems to be good. So there's nothing that's really breaking out to the upside or the downside.
Are you on speaking terms with Greg Peters?
Yes, of course, always.
How do you help Greg Peters? I mean, he's got some heavy lifting to do.
Listen, bond investors are, by their nature, have a different personality, right? Because with bond investors, you're always worried about the downside, right? I spend a lot of time focusing on equities, which is all about hopes and dreams.
That nails the market right there. We should, I like that. Bloomberg surveillance. hopes and dreams. George Patterson, brilliant, just serious quant chops, CIO Quantitative Solutions at PGIM. Can't say enough about the rigor of the PGIM shop. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Lucy White and Ellen Milligan off the desk at Queen Victoria Street this morning. The headline is sobering to anybody of the history of the United Kingdom and the fabric of the people. Former Prince Andrew arrested on suspicion of misconduct. We are advantaged to have Mishal Husain with Bloomberg. She was with us ages ago. She was, I think, 12 years old when she darkened the door. And then a sterling career at the BBC and wonderful acclaim on understanding this disunited kingdom, maybe like no one else. It helps with a affiliation with Pakistan to be an outsider as a family. She has a resonance with the people of Britain like no one. I just, Mishal, in the shock of it all, I want you to speak to an American audience. How do the people of the United Kingdom react to this arrest this morning that takes us back to the arrest of Charles I in the 17th century?
You know your history, Tom. Morning, Tom. Morning, Paul. I can tell you, first of all, the reaction in this newsroom, that this is the kind of moment where you don't just do a sharp intake of breath as you see the news come through. People are standing up at their desks just wanting to make eye contact and talk about the enormity of what's happened. So it was in the morning, our time, that the news first came that one of the police forces in the UK, the one that works in around the London area, in the words of their statement, had arrested a man in his 60s on suspicion of misconduct in public office. It was soon apparent that this man was the former Prince Andrew. But the key point being the idea that a member of the royal family has been arrested, is in police custody, is answering questions, and that police searches of 2 properties, the police statement told us, were underway. Norfolk and Berkshire. Now, that means royal residences, estates around Windsor and Sandringham at Norfolk, which is where former Prince Andrew is effectively in an internal exile. So there's the enormity of that. And then it's clear from the police statement that what they're actually investigating is the period when Andrew was a UK trade envoy and what the Epstein files now appear to show about the passing of information to Jeffrey Epstein.
And I know the Telegraph has an extended discussion about Icelandic material, stuff off our radar in America. Mishal, the reality for Alexis Christoforous, Paul Sweeney, and Tom Keene is our knowledge is Colin Firth and Helena Bonham Carter in the King's Speech a few years ago. Discuss the resonance of this with the next royal family, with the Prince and Princess of Wales, the king ill with cancer, doing better, and all that. Explain the generational dynamics here of the royal family with this shocking arrest.
This is not only uncharted territory for the royal family, but it is such an immense moment because even though back in November the king acted very significantly in the wake of the publication of Virginia Giuffre's posthumous memoir, even though he acted at that point to remove the His Royal Highness title from Andrew, to remove Prince, which is his birthright as the son of the late monarch, and also to remove him from where he was living on the royal estate in Windsor and to send him to a much more private place where he would essentially be out of the public gaze entirely in Norfolk. Even though they have done all of that, the real danger and risk and what they'll all be contemplating and digesting today is the fact that in public, as has already happened a couple of times to the king, people may be heckling them, calling out. Certainly it's hard to imagine a future interview in which this doesn't come up. Prince Andrew actually has just done Prince William has just done a BBC interview in which nothing of the sort was discussed. But even though they have taken steps to distance themselves from Andrew Mountbatten Windsor, this will no doubt be a really difficult moment. You know, public support for the monarchy is widespread in this country, but it does rather depend on an unspoken assumption that everyone is going to behave really well. And when you're in this kind of territory, it obviously has implications for the institution more widely than one individual.
Mishal, the King Charles has issued a statement here this morning. King Charles has said that, quote, law must take its course, and King Charles is saying that he will not comment further on this matter. What are next steps here? Not that we have any guidebook here, but what do you think are next steps from the authorities?
Well, and interesting, the King had already indicated that if this did become a police matter, that he would do nothing to stand in the way of an indication. So the statement follows on from that tone that was set earlier. I think it's worth reminding ourselves what this investigation is about, the kind of role that the former Prince Andrew had as a UK trade envoy, the idea that as you try and fly the flag for British business around the world, that you have a prince, as he was then, as a calling card with pulling power to get foreign businessmen into the room when he went on a foreign trip. That was essentially the job he did. And it was... There were questions in the media. He got the nickname at that time, Air Miles Andy, because people weren't sure quite the value to the taxpayer that was being delivered by him flying around the world in that way. But it's that aspect of his previous role in the public eye that is at the heart of this particular investigation, because there are emails in the Epstein files which appear to show that he received, for example, an official report on a visit overseas, and he forwarded it to Jeffrey Epstein within minutes. So trade envoys are supposed to be under a duty of confidentiality. So that is the specifics of what the police are looking into. But of course, we don't know where this investigation goes, and it is a PR nightmare. It is reputationally, personally, on every level, you can see the implications for the royal family. So it's not just a development, it's a real moment in the UK.
It is. Mishal, do we know what rights former Prince Andrew has? Is he simply the rights of the average or common English citizen? Is there anything different here in terms of the type of treatment he'll receive? Do we know anything?
I think it's pretty clear from this development and from the police statement is no different to the way that any other investigation would be portrayed, although they do say we recognize the significant public interest in this case and we will be issuing updates when appropriate. Now, one aspect of this for the police is that in his time as a member of the royal family, and I would think even now, Andrew would always have had personal protection officers serving police officers with him. So the police are also fielding those accusations of, you know, what did those officers see or not see, or what should they have seen, or what should they have said, given the allegations that have surrounded him for some years now. He's always denied any wrongdoing in relation to his association with financier and convicted paedophile Jeffrey Epstein. But next steps will be what we learn from this police investigation in due course. And I should also say that he is entitled to a fair trial if that is what it comes to. I'm going to stress there are no charges at this point. This is a police investigation. But everyone will also be conscious of those rights.
Mishal, one final question to get onto your busy day. Across America this morning in our London offices, Mishal Husain joins us here on the arrest of the former Prince Andrew. And Mishal, you know this encyclopedic, I have to use artificial intelligence. And I typed in, what does Prince William's 2026 look like? And it goes through the awards in Mumbai coming up later this year, the royal warrants in the spring of this year, things I don't understand. And down at the bottom, very quietly, is I think what Americans understand, Prince George will be 12 in 2026. Mishal Husain, the continuity of the royal family as they move forward with all of this scandal out there?
You know, one thing that they will be thinking that was the right thing to do before this moment, and I guess in the context they will be proud of at this moment, is the fact that his titles, his position as the Duke of York, all of that was removed back in November. So I think they will be probably taking some heart from the fact that as an institution, as the monarchy, as the royal family, as the sovereign, which King Charles is, that action was taken a couple of months ago now. But yes, you know, out and about in the public eye in the UK, elsewhere, they will have to be prepared for this coming up in ways that they would not want. The royal schedules, the protocol, the interactions that exist with the press where they exist, they'd like these to be as carefully controlled and on message as they could possibly be. And this kind of situation adds a degree of unpredictability and jeopardy.
Mishal, thank you so much. It is the Mishal Husain Show. Look for that.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.